Shares of media and internet conglomerate IAC are higher right now, despite posting a wider than expected loss. The company did beat analyst estimates on revenue. The company also announcing it is now considering a sale of its ownership stake in Angie to its shareholders, the online marketplace for finding home improvement specialists. IAC spun out Angie into its own public company in October of 2017 and currently owns about 85% of it. Angie shares initially popped about 10% on the news, but are now trading lower. So joining us now in an exclusive interview is Joey Levin, CEO of IAC, with our own Julia Borston. Julia.
Morgan, thank you. And Joey, thanks so much for joining us on the heels of your big news about Angie, as well as your earnings report. Let's start with the Angie news. Why are you deciding to spin off that 85% of the company that you own, and why now?
Angie's in great shape right now. We've spent the last couple of years really improving the customer experience, expanding profit. I think adjusted EBITDA up 2.5x or so over the last couple of years. Customer experience up meaningfully, customer retention up meaningfully, net promoter scores up meaningfully. Business is now in a position where we think it's healthy enough to be on its own, and we're really slimming down IAC and trying to focus on doing a few things well. And Angie's in a position where it's capable of standing on its own and having its own currency. I think not impossible. There's some consolidation in that category, and Angie can do really well on its own.
Tell us a little bit more about this strategy of slimming down IAC and what could come next. You say in your letter to shareholders that you're looking at new opportunities to deploy capital, and also there might be other opportunities to spin things off. What are you looking at right now? Where do you expect to put that capital to use?
Yeah, we're looking at, we always look at a wide range of things, but the bar for us on new acquisitions is very high, always has been. I think that when we look at the market right now, we've generally seen things at a level where they're willing to transact is pretty expensive for us. And when we see that environment, we try and build cash. And that's a little bit more of the mode that we're in right now, but we're very actively always looking and seeing if those opportunities arise. In any market, opportunities can happen, but it has been generally on the more expensive side where people want to transact lately.
Joey, it's Morgan, and when I hear you talking about building cash in this environment, it reminds me a little bit of Warren Buffett and what's going on over at Berkshire Hathaway, especially as we do see public equity markets at record highs again today. I am curious, though, what you make of the M&A landscape more broadly, especially as we do go into 2025 and we do have a new administration that's going to take the helm in January.
I expect this will be a big year for M&A generally. Whether for us, I'm not sure, but for M&A generally, I think it will. Certainly loosening up the regulatory environment is a factor. But also, I think people have sort of, last 5 years, probably enormous volatility from going into 2019, then COVID, then coming back up with rates, now then coming back down as rates came up. I think there's actually a little bit of stability. People have been at a stable place for a while. And I think when that happens and the regulatory environment supports it, I think that's a recipe for real transactions and the kind of transactions that can help drive real efficiency in businesses.
Joey, it's John Fort. Great to have you. So, question about AI. I know you've had the OpenAI relationship that's been talked about, but when you have so many brands that touch so many different customers, you've got a lot of data. How do you end up using AI in a way that accelerates your business overall and the individual businesses?
Yeah, I mean, I can give you a bunch of great examples, but one is just using conversational interfaces is, I think, enormously valuable for our businesses. A business like Angie, which is about to launch a product, I think, at the end of this month, where we find out more about the user's job, what they want to get done in their home by using a conversational or offering a conversational user interface. Same thing in one of our nursing businesses where nurses are trying to find jobs. They can interact with an AI that's available 24/7, generally more empathetic, generally more knowledgeable, and has been a great tool we've experimented with a few clients. But also, one of our biggest businesses, Dotdash Meredith, we've now been able to take the performance data that we have on our relatively small section of the internet, which is the content that we own, and been able to map that, again, using partnering with OpenAI, map that on the rest of the internet to show the performance that we drive on our own sites, on other sites that operate similarly. That kind of scale is just remarkable.